from temperature checks to avoiding handshakes. This meeting of the Organization of Petroleum Exporting Countries was all about responding to the coronavirus. The outbreak has battered industrial output, driving oil prices down to around $50, their lowest level since December 2018. And the world's oil exporters are reducing their output by 1.5 million barrels per day to push prices back up.
We convene at a time when the outbreak of coronavirus has had a pronounced adverse impact on economic and oil demand forecast for 2020, particularly in the first and second quarters. This underscores the fact that events in the oil markets are subject to uncertainties beyond the capacity of any individual stakeholder to manage on their own. Complex challenges require concerted action.
The production cuts are deeper than most analysts had expected, yet oil prices did not rise significantly after the announcement. That may be partially due to a massive drop in demand from the world's biggest energy consumer, China, where the coronavirus originated. Oil purchases there fell 25% in February, and according to Morgan Stanley, sales won't rise above last year's level or may fall even lower. That's expected to restrict growth in global oil demand to 500,000 barrels per day, down from previous estimates of 800,000 barrels. Another concern among oil investors is whether the agreement to cut output will last. Russia has not yet agreed to curbing its oil production, and President Vladimir Putin says current prices are not too low for Russian producers.
I want to stress that for the Russian budget, for our economy, the current oil price level is acceptable. Our macroeconomic policy this year had forecast Brent oil price at $42 per barrel.
In the past, some OPEC members have resisted production cuts because they fear other producers could jump in and snatch a larger market share. If Moscow doesn't back the oil cartel's decision, the deal could fall apart. Mobin Nasir, TRT World.
Well, for more on this, I'm joined now by Wald in Jacksonville, Florida. She's the president of the energy consulting firm Transversal Consulting. Welcome back to the program, Ellen. Were you surprised by this announcement from OPEC? 1.5 million barrels a day, a further cut to output because largely of the coronavirus outbreak?
It wasn't surprising given the fact that the target number for an OPEC cut had been going up basically every week since the JTC meeting in February. First, we heard a 600,000 barrel per day cut, and Russia said, no, we want more time to analyze the market. And then that creeped up to 1 million, then 1.2. And so I'm not surprised that we're hearing 1.5. This was kind of telegraphed by the Saudi oil minister. But the big question is Russia going to sign on to this? Because as the Iranian oil minister said at the end of the meeting, there is no plan B. And so if they can't get Russia on board, it looks like everyone's just going to go home. And all they'll wind up doing is just renewing the current production levels.
Now, we know Russia in the past has also been reluctant to cut output. Why is Moscow generally hesitant to go down this route?
Well, Moscow looks at the situation and has to say, we really have nothing to lose here because, as Putin said, this oil price is acceptable for our budget. Now, that may not necessarily be true. Russia may really be hurting, but Putin is putting forward a strong face and basically coming from this negotiating position of, we don't need this, whereas the Saudis are coming at this with the position of, this is a fire that we need to extinguish. And that really kind of highlights the different positions between the two sides. But Russia would probably love to end up with a situation in which OPEC, particularly Saudi Arabia, bears the brunt of these cuts, and Russia basically gets to walk out of there either agreeing to very minimal cuts or nothing at all.
Yes, as you say, all eyes now on Russia to see if they'll agree to that 1.5 million barrel per day cut. Wald, thank you, as always, for your analysis.